Next, let us look at the quantitative parameters related to term loans. First one is technical feasibility. When business entities go for long-term project, they will fund the project with term loan, and the balance portion they'll use their margin money. This is what generally happens in the industry. Okay. Here banks will be asking for project report to understand the viability of the project undertaken by customer. This project report may be prepared by in-house, or it can also be prepared by firm of consultants or merchant bankers, right? Okay. Here the technical feasibility of the project and economic viability of the project is the foremost important requirement when it comes to funding long-term projects. Okay, so credit officer should satisfy himself that the projects, okay, for which the term loan they are proposing are technically, economically and commercially viable, and wherever required they can take a second opinion from bank's technical consultancy cell or from empaneled consultants of bank. Okay, this is the first aspect. The second aspect is promoters contribution. See, already I've mentioned that these projects cannot be funded only with the term loan. Okay, there should be some contribution from promoter. The satisfactory contribution from promoter is considered as 33% because that will give you project debt equity ratio of 2:1. However, depending upon the case and circumstances, banks may go up to, they come down up to 20% contribution level. It means 80% is going to come in the form of term loans. Okay, so there should be a definite contribution from promoters, but what should be the exact contribution level? What is the definite contribution level for promoters cannot be prescribed for all customers. It's going to be on case to case basis, and here sanctioning authorities will have discretion to decide that contribution level. The next aspect is debt service coverage ratio. This is the ratio which is going to measure how many times cash accruals will cover repayment obligations including interest. There is a benchmark ratio for DSCR. It is 1.75. It means cash accrual should be 1.75 times of total repayment obligations in a year. Okay, so we can divide this debt service coverage ratio into two. One is gross debt service coverage ratio, the other one is net debt service coverage ratio. The benchmark for gross debt service coverage ratio, already I mentioned, it is 1.75, whereas for net debt service coverage ratio it should be at least 2. Okay, right. The next aspect is margin on security. See, this is linked with promoters contribution as well, because I said 33% promoters contribution will give debt equity ratio of the project as 2:1. Here this 33% promoters contribution need not be entirely in the form of share capital. It can also be in the form of retained profits of business. It can also be in the form of unsecured loans brought in by promoters. Okay, but bank will try to keep this ratio as 2:1, and the level crossing 2:1 may require deviation approval and all. Okay, apart from above what we have discussed, there are other parameters. Okay, the parameters which govern working capital facility will also get applied to term loans to a certain extent, like for what purpose loan money is going to be used, what is the end use of funds, then what is the credit rating, what are the triggers for say reset of rate of interest, and so on. Thank you so much. We have come to the end of this webinar, and I'm sure you would have really derived value from this short and crisp webinar. If you wish to continue this learning journey, I have an amazing opportunity for you. I have published several courses on banking and financial analysis area, each course costing 2,000 rupees. But for you, I'm going to give you a special offer. Here we go. banking credit courses bundle. This includes course number 1, banking credit analysis process. It's a comprehensive course with 200 plus lectures. It covers financial analysis, working capital, term loan, LC, BG. It's a comprehensive ever course. Then we have course number 2, that is how to carry out financial analysis as a banker. This is going to focus exclusively on financial ratio analysis, cash flow analysis, and fund flow analysis. Then comes course number 3, how to carry out term loan appraisal and analysis as a banker. It's a comprehensive course focusing on the technical aspects around project finance and term loan. These are all the topics. Then comes course number 4, how to prepare CMA report for bank loan through 8 sections. This course will take you through entire CMA report preparation process for bank loans. Then we have course number 5, how to read balance sheet. So if you are a non-finance person, this course will give you complete insight into balance sheet, how to read them, how to interpret them, how to analyze them. Okay. Then we have course number 6, how to read CIBIL report. By taking this course, you will get a complete picture of CIBIL report reading process. Then we have course number 7, how to prepare cash budget for bank loans. This course will help you to understand the concept of cash budget, which is widely used in short-term lending like auto credit facilities, letter of credit and all. So far I have introduced 7 courses of 1,999 each. It means 7 courses of value 13,993, but you are going to get it only for 2,599, and it is not yet over. I'm going to give you some more bonus. Course number 8, collateral securities, a comprehensive study. Course 9, how to carry out credit risk rating for non-trading entities. Course number 10, in this course you will learn banking credit analysis through various case studies. So now it is 10 courses of value close to 20,000, but you are going to pay only 2,599. It is not yet over, some more bonus. Course number 11, how to read audit report. Course 12, this focuses on letter of credit, and course 13 focuses on financial analysis in very short duration. So you have 13 courses of value close to 26,000 rupees, but you are going to get it for just 2,599. So it is basically 7 main courses, and you are going to get another 6 complementary courses, 6 courses as bonus. So overall it is 13 courses of value close to 26,000 rupees. It's 1,500 plus lectures. You get lifetime access for all these pre-recorded courses. You can access them in desktop, laptop, mobile, iPhone, iPad, and the overall cost is around 26,000, but you are going to get it only for 2,599. So this is a once in a time opportunity for you. Enroll now. I'll see you inside the course.